Welcome to Digital Asset News. Take your top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today we've got some pretty good stuff. First up, billionaire Chamath Palihapitiya says he bought 1 million Bitcoin in 2013, and he still got a lot of it. So really what we're looking at is one of the king of all whales also. China's blockchain service network to integrate Chainlink as the crypto asset makes a big pump, and an article from Cointelegraph which goes by 3 ways Bitcoin traders can spot and avoid crypto market manipulation. And after we go over this quick article, you're going to realize just how difficult it is and how you really shouldn't be trading too much. But first, let's take a look at the market. It is June 25th. It is roughly 4:30 Texas time. It looks like Bitcoin actually took a big dip today. From what I understand, it went below 9,000 for just a spell, but regained nicely, hitting around 92.71. So pretty much not too much of a loss, just trading sideways. Ethereum 233, Tether's Tether, XRP's XRP, so on and so forth, not too big. Chainlink up 2.7% and 15% for the week, probably with that big Chinese bump. So good job to all the Link Marines out there. And pretty much the rest is pretty much stagnant. So let's jump into today's top story. So first up, now I knew Chamath. I know that he had a ton of Bitcoin. I had no idea that he had a whole 1 million Bitcoin in 2013. And this was actually an article that was spun off because he was actually a guest on Unchained Podcast a couple days ago. And he said some very interesting things, which we're going to go over. But just to jump to this article to give you kind of like just a little backdrop story, here's what's happening. I'm not going to read the whole thing because it's kind of a fluff piece. I mean, it's well written, but this is the real meat and potatoes. So he says his first investment in Bitcoin was a purchase of 1 million back in 2013 when the crypto was valued at around $80. Man, that would be nice to pick up Bitcoin $80, right? Today, that sum is worth more than 9 billion, so good for Chamath, good for him. There's a well-known person in the Bitcoin ecosystem, he states. His name is Wences Caceres. He was one of the that introduced it to me in 2010. And we're actually going to Las Vegas for my 40th birthday, or his 40th birthday. And that's when he pitched me on it. I remember landing 3 days later, called my office and said, buy 1 million Bitcoin, which would be awesome just to be able to call your office and go, hey, buy 1 million Bitcoin. That'd be great. That's how I started. It was $80 or something, and it kind of sounded interesting. But then it took me a few years to really understand it. I didn't totally understand all the mechanisms of it. And to be honest with you, I've forgotten most of the mechanics now. I studied it. I made an underwriting decision to buy and to never think about it again. And by and large, I've never thought about it again. And you're going to see crystal clear exactly what he's talking about here. He really has not thought about this too much moving forward. He's actually the ultimate Bitcoin maximalist. I would say I put him up there right with Max Keiser. So let's break into the actual interview. So first of all, I've known about Unchained Podcast. I've listened to it a couple times. I highly recommend it. I'm going to link that in the description. And I probably should put it on one of my recommendation lists because I listen to it every so often. But it was pretty interesting. And just to go over the whole piece, he says a lot of different things and it's pretty interesting stuff. But before we even jump into that, I want to take you back in time. And I want to take you back to December 12th, 2017. And this is when Chamath, he was on MSNBC, and he just talks about Bitcoin because the same message he had back then is the same message he has now, and he hasn't faltered. And that to me shows consistency, and that's what I like to see.
2012, I was introduced to it. I started to accumulate. 2013, I wrote an article. And
so hold on, just so we know and can feel bad about ourselves, you're accumulating it at what price?
Well, my dollar cost average is around 100 and something.
And you've held it, everything you've bought?
Well, at one point, myself and so I was introduced to it by a person. I asked him if I could disclose his name. He said no. But he, myself, and another person, all three of us, relatively well known in the Valley, we started. At one point, we owned almost 5% of the entire float.
So right there, you can just hear the disgust in the co-host's voice when she's like, oh, how much? Because remember, this was at the ultimate peak of Bitcoin. It was around 17,000, 18,000. Hadn't hit 19,000 yet. Those days were coming. So when all this happened and they had Chamath on, it was like an eye-opening experience. I couldn't believe it. So I'm going to fast forward because the rest is just kind of a fluff piece again. And I want you to hear about the same thing that he says today is the same thing he says back then.
But has it left the station?
No. So here's what I would say. The same way that I said in 2013, put 1% of your net worth into Bitcoin, I will put myself out there today. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is in the next 20 years, $1 million a coin. So there you have it.
You're telling people to put 1% of your net worth
At the time.
That's for
It's a lot harder.
But that's for people who have money to play with. I mean, if you're talking to an average retail investor who's looking at this, somebody who's trying to figure out, should I put it in my 401k or should I put it in Bitcoin, you would tell them what?
Well, I don't think that's the actual trade-off. In your 401k, so for example, in your IRA...
Chamath, I'm saying that there are people who have to make decisions about these things who aren't fully invested in the 401k.
What I'm saying is I own a lot of Bitcoin in my IRA. It is possible. So I did take a small percentage and I put it in there. All I'm saying is there's a small percentage of everyone's
in the most tax-advantaged way.
Absolutely.
But you have money to play with.
No, but what I'm saying is you could buy the S&P 500 index, buy 99% of that. So if you have $100 to invest, what I'm saying is...
Put $1.
Put $1. And the reason that $1 is so valuable is that it is fundamentally not correlated to the other 99. And just on the off chance that all the people that manage the 99 may not totally know what they're doing, the $1 may actually save us all.
Makes sense. So if you want to hedge your bet, and this is what I have been saying for a long time, if you have these hedge fund managers, if you have places like Fidelity Digital Assets with 7.3 trillion assets under management, or places like Van Eck, and they have 49 billion assets under management, TD Ameritrade with 1 trillion assets under management, or the Tudor Group with a paltry 21 billion, these types of places and institutions can tell their customers, their clients, go, look, we know that the stock market is very volatile. It is going up, but how about we put, I don't know, 1, 2, 3% of your portfolio into this thing called Bitcoin, which is the best performing asset class ever. We think it's going to do well, and it could be a hedge against what is going on. It's kind of like insurance, or as Chamath calls it, schmuck insurance. And I think if you make that pitch to your clients, they're like, okay, sounds good. How much was it before? It was $5, $80. Now how much is it? 10,000? Let's do that. I like those odds. That is a huge asymmetrical price advantage. I don't think anybody who wants to help their clients out wouldn't say that. So that's what Chamath said then. And then today he's pretty much the same way. But when I listened to the whole thing. It's pretty great. You should take a listen to it. I'll link in the description. But I got a big sense and a deeper understanding of where certain Bitcoin maximalists really are and where they come from. So I'm just going to give you the highlights. He believes Bitcoin is the only one. There is nothing else. He does not believe that Bitcoin will be used as a currency. He thinks that's ridiculous. He thinks that other types of payments like Venmo and PayPal and all these different other things that are already here are going to be enhanced, and Bitcoin will just be used as a hedge, or as he calls it, schmuck insurance. He says Bitcoin is only good as a financial hedge, a sort of catastrophic insurance if like everything falls apart. And he does not believe that the quantitative easing and all the different things that have happened in 2020 is the catalyst for Bitcoin's moment. He just believes that bad decisions made by governments moving forward is what is going to catapult Bitcoin potentially into the forefront. And he said something odd around 22 minutes. He said that Bitcoin and the stock market are not correlated, even though all the day traders and institutions are making it correlated. So I don't know what he's talking about there. I'll let you listen to it and make your decision, but it's just kind of odd. And then getting into the psyche of like more of the Bitcoin maximalist, he doesn't like to call it digital gold, whereas I did a video a couple days ago where I called it the Bitcoin elevator pitch. Essentially, how can you tell people about it? Because people are inevitably going to come up to you and be like, hey, what's up with this Bitcoin? Just went for like 15,000 or 16,000 or whatever it's going to go up to this year and then next year. So you're going to have to explain it to them without sounding like a rambling madman. This is what you're going to sound like to them.
Of an instrument that would not only provide inverse reactive current for use in unilateral phase detractors, but would also be capable of automatically synchronizing cardinal gram meters, is that instead of power being generated by the relative motion of conductors and fluxes, it's produced by the modial interaction of magnetoreluctance and capacitive diractance. The lineup consisted simply of 6 hydrocoptic Marsal vanes, so fitted to the ambifacient lunar wane shaft that side fumbling was effectively prevented. The main winding was of the normal lotus-o deltoid type placed in panendermic semi-boloid slots of the stator. Every 7th conductor being connected by a non-reversible Tremi pipe to the differential girdle spring on the up end of the gram meters. Moreover, whenever fluorescent score motion is required, it may also be employed in conjunction with a drawn reciprocation dingle arm. to reduce sinusoidal depleneration.
So I just say, here's my elevator pitch. I said, Bitcoin is digital gold. And I said, I know people say, well, it's not gold really. I know, but as a frame of reference, because people don't really realize, that, all the factors of gold and everything else. So I say Bitcoin's digital gold. And it's like gold because it's scarce. There's only going to be 21 million ever created. Gold, we're still finding that, but there is a limit to that. Unlike gold, I can transfer it to anyone in anywhere in the world at any time in a very small amount of time frame and for next to nothing. When it came out years ago, it was worth pennies, and now it's worth almost $10,000. It is the best performing asset class ever. It has beaten gold, it has beat oil, and has beat every single stock out there, S&P 500, the Dow, and everything else of all time. So that is why I'm heavily invested. So that's the easiest way that I can say it. Now, he says, no, it's not digital gold. And people think of, even though some people think that gold is a hedge. And the way he said it was very convoluted, but I'm like, sure, okay. To me, I just think it's just simpler just to give people a point of reference. He calls it schmuck insurance. Sure, I don't see it like that. I really do see in the future that the new savings account will be gold, silver, Bitcoin. I don't think a savings account will be fiat money, especially with the inflation that I believe is coming. So if you're just going to sit on your money, you're just losing money, essentially. So I think gold, silver, Bitcoin is a great investment. Now, there is two parts I'm actually going to play. And here he talks about, the host asks him, hey, what do you think about Bitcoin, and is there anything else out there? Now, just to preface this, Max Kaiser is the same way. He is like Bitcoin only. Now, the other Bitcoin maximalist that I can think of is Trace Mayer, and he was around since the original time. He's one of the OGs, just like Chamath here. And he states, Bitcoin doesn't need to satisfy all the needs for all the people. Sometimes you want a knife, sometimes you want a fork, sometimes you want both of them together. So we have to keep an open mind. And again, he's one of the first ones, and I can just see that, yes, that makes sense to me. I don't know how you are out there. Let me know in the comments section, but that's just how I see it. But again, the whole discussion, I like to have these discussions and peer into the mind of what people are thinking and how they're actually shaping the narrative, because this guy's everywhere. So when I hear him talking about it, I'm like, okay, I get it. So I'm going to play this. It's about 2 minutes. I think it's going to make more sense.
Well, I was also curious. So do you see merit in any of the other crypto assets, in particular Ethereum?
No.
And why not?
It's kind of like when you have a bellwether instrument. The gains typically go to the winner. So I'll use an equity example to make the case. When Obamacare passed, there was going to be a clear tailwind to health insurance. And, you could have bought a basket of health insurers, or you could have just bought United Healthcare. And the basket would have performed okay. United Healthcare 10x'd in the last 10 years. If you believed in smartphones, you could have bought a basket of things in 2010 or 2008 or 9 when the iPhone first got released. You could have bought Nokia and Motorola and Samsung and HTC, or you could have just bought Apple. And Apple, frankly, just crushed everybody else. The point is that in any market, when there's a clear winner, it's not that these other things can't win, but there's a weird psychological effect that almost drives these second and third tier winners, which is a desire by people almost out of this sense of insecurity to not want to admit that there's a winner simply because they weren't the one to pick it first. And so what they do is they create these convoluted narratives and theses to basically anoint other winners. And yeah, can they win? Sure. But do they ever win like the category killer? No. I mean, do you really want to be long Lycos and DuckDuckGo, or did you just want to be long Google? There has been not a single market where you've been rewarded as handsomely for being long the number 2, 3, and 4 player as you are for being long the number 1 player. And again, it goes back to when things tip and go mass market, the average buyer makes the simple decision. And the simple decision is to go to the category defining winner and then set it and forget it. And so if you really want to make the money, my view has always been you find the one that's about to win, Facebook, Microsoft, Apple, Google, Amazon, and you buy it. But what you don't do is try to do some convoluted spread trade or, long the number 2, 3, 4, 5 person, hope it's just really, honestly, you can make a little bit of money, but there's so much brain damage and pressure and complication.
So I gotta say, I agree with him on some points, but the big question is, which one is the actual category winner? Like, how do you know? Like when he gave the example of when Obamacare came out, and I remember this too, they said, hey, the marketplace is going to be open, and then go to the website. And of course, the website crashed because they just couldn't handle that. And he said, yeah, you could have done United Healthcare, just put all your money in there, and boom, you would have made it. But how do you know that? How do you know that? So the same thing that he talks about, as he says, well, do you want to invest in Google or do you want to invest in Lycos and DuckDuckGo? Which brought me to my next point. So these are the biggest .com companies from 98 to 2019. I just want to make a little quick analogy or comparison. Let me turn this volume down. So this is June 98, okay? So you see how Yahoo and Netscape are kind of going back and forth, Lycos. First of all, does anybody remember any of these? If you do, you're old. I mean, because you're just like me, because I remember all these when they first came out. So when he talks about Lycos, you're like, yeah, but just watch Yahoo. So this is 98, and then I'm just going to go forward to 2002 and look at Amazon and eBay. So look, there's eBay in 2002. What happened to Amazon? It dropped down. So if you're looking at this right now, you're like, oh, wait, that's the clear winner, eBay. But hold on, let's keep going forward. Now it's Google. And there's eBay, and eBay is still ahead of Amazon. So even if you're talking about an actual category, as far as like online retail, eBay is kicking the tar out of Amazon right now. Google is, of course, Google, and that is the actual search engine. So I can see that. But if you're looking at category winners, how do you know? Let's fast forward. So then we take a look at here, and the same type of thing. So we've got Google, Amazon coming up. Then what about Netflix? And this was back in, Blockbuster was around around that time. So who was the actual winner back then? Then we take a look here, and here comes Facebook out of nowhere. And then look, now here's Amazon, and there's Facebook, and look, here's Alibaba. If you just would have known about that back then, you could have made a tremendous killing. Or Baidu, eBay coming back up, but they're never going to come. So again, if you went back and took a look at it, Google was this huge, just a juggernaut that came out of nowhere. And Amazon was floundering for quite some time, but you could see it actually would make sense, right? And then eBay, which was another online retail, well, and let's just be clear, eBay was an online retail, and for the longest time, eBay was crushing it. And as far as like search engines, Lycos was doing pretty darn good until Google came along, and for the longest time. So the question really is, okay, what is the actual category winner? Now I'm going to piece it down even more. So this is back in 96. We've got AOL, which if you remember AOL, well, you're definitely up there, just like me. And then, of course, like Yahoo is down here. Here's Netscape, Excite, Lycos. I don't even know what this one is. Web crawler, sure, whatever. How do you know which one it's going to be? Let's just fast forward. Jeez. And then, of course, we've got MSN, 98. Let's keep going, 2001. Look at Yahoo, crushing it for years and years. And then Google takes over. But watch something, this is amazing. This is in 2007. You would think, well, Google just jumped it, and they're going to stay up there forever, right? No. Yahoo takes the place in 2008, and it keeps crushing Google. Not crushing, but beating them. So you could have gotten Yahoo down here, or Google down here, whatever else it is, and you could have made a ton of money. And the same thing, I think, goes for cryptocurrency and digital assets. Now, Google becomes the clear winner. YouTube behind, social media platforms, who would have known? So again, if we're going to talk about who the actual category winner is, it's kind of tough to say. So here's my question to you. Who do you think is going to be the category winner? And I'd like you to kind of break it down for me, because I think, this is my personal opinion, Bitcoin is on the minds of everybody, just like AOL was on the minds of everybody. If you remember getting that little CD in the mail, and you would put it into your CD-ROM drive. Remember those things? And you would pop it in, and you would have the little running man, and you would get to be online. You're like, this is awesome, and you've got mail and all those things. That was huge, and it was huge for years and years and years. Do you think that Bitcoin is going to be like that? Or do you think it's going to be like how Amazon is, and just was around for a while and just kept being around? So that will be interesting. Me personally, I see Bitcoin as being the number one thing to actually pop off and make huge strides for quite some time. Now, moving in 5, 10 years from now, who knows? It's anybody's guess. But I can tell you like this. If we take a look at what the search engines or .com companies or online retail or whatever kind of apps are out there, usually there is a different displacement of the king. But I could be wrong. All right, and the last piece here, we're going to talk about, because he has to clarify what he says when he says, Ethereum, no, I don't see any reason for that. And this really, kind of peers into the mind of the actual Bitcoin maximalist. Because in the article we just talked about, in the last sentence, he says, and by and large, I've never thought about it again. And I don't think, he's a smart guy, but I think he's got a lot of things going on. When you're a billionaire and got a lot of things happening, it's not like you really invest a ton of time into all these different categories. And he even talked about it. He said, look, I want to make a simple decision. I just want to hold and invest. And I think what he's talking about is when he's holding and investing, he doesn't have to think about it. He doesn't have to waste the brain cells. He can just kind of focus on the other things that he has to do. And it makes total sense. And I think that's in correlation with a video we did a couple days ago where it was an article by Billy Bambra, and he pretty much laid it out and said, look, Bitcoin, the actual price fluctuation of Bitcoin isn't by the long-term investors. That's 11.4 of those people who hold Bitcoin. It's actually these crazy people over here, and sure, everybody's crazy, who are trading just 3.5 million Bitcoin. And it was a pretty great story, and we covered that hopefully pretty well enough. But I see it as what Chamath is talking about, first of all, is like he says, look, if you're trading, you can do all that. But at some point, people are going to catch on, and they're going to buy Bitcoin, and they're just going to hold it just like me because they got other things to do. They're going to put it in the IRA. They're going to put it into their hardware wallet. They're not going to touch it. They're just going to keep it, and they're going to let it appreciate, and they're not going to trade it. So all the traders that are happening right now, it's not going to happen as much later on. And when that happens, that's when the price goes up. So just back to the original point about when he talks about Ethereum and cryptocurrencies and smart contracts and chain tracking oracles, all those things, he's going to explain why he doesn't believe and it's only Bitcoin.
It's just never worth it.
So you essentially view all the crypto assets as kind of like one category. Like you don't break them out into separate categories, because a lot of people would say like Bitcoin is a currency and Ethereum is, this platform just for decentralized applications, and they don't view them necessarily as competitive. There are of course people who do view them as competitive, but a lot of people just see them as fundamentally different things. But
I'll give you a different example. You could look at Mercado Libre as an incredibly complicated, and valuable delivery platform for Central and South America. And you could look at Wayfair as an unbelievable example of, furniture bought, purchased, and designed over the internet. I look at it and I'm like Spanish Amazon and furniture Amazon. And so I'm like, okay, I'll just buy Amazon. I honestly, Laura, this goes back to a philosophy of mine, which is what I've learned over time is that, I've really made my life much harder than it's needed to be. And I've overcomplicated a lot of decision making in my life. And as I've gotten older, what I realize is that the best decisions are the ones that are really instinctive and the most simple. And you can use enormous amounts of data, and you can find all kinds of clever ways of slicing and dissecting things. But at the end of the day, the simple decision tends to be the best and the most defensible and the most enduring decision. And one of the simplest decisions that you can make is to buy the category winner and wish that the whole category does well. Because if it does, as long as the category winner stays on top of the category, they will get the disproportionate amount of the gains. And that's just been completely true in markets, since time immemorial.
And I was also curious, have you been watching what's been going on in DeFi?
I don't even know what that is.
And there we go. So this is a smart guy. Chamath is a smart guy. He made a pretty good choice back in 2011, 12, 13. But when he talks about category winners, if you're going to talk about decentralized finance, Bitcoin's not in there. So if we're going to talk about oracles, Bitcoin's not in there. If we're going to talk about chain tracking and all the different other aspects that blockchain and distributed ledger technology can actually take over and actually do, Bitcoin's not it. So let me know what you think in the comments section, and let's move on. Next up, China's blockchain service network to integrate Chainlink as crypto asset soars 11%. And this article right here got me pretty excited and actually increased my dollar cost average by an extra $25 every week because I'm a huge spender. Anyhow, this article states China's Blockchain Service Network, or BSN, the country's first national level blockchain alliance, is now utilizing Chainlink to access off-chain data. If you don't know exactly what an oracle is or what Chainlink does or how smart contracts work, check out my Essentials playlist. Video 4, we talk about all those things. We even go down and break it into blockchain and Bitcoin, everything you need to know about that. But this article here has me pretty excited about what's going to happen with Chainlink, and I got to tell you, I think it's going to be one of those big monster coins for, if not this year, then at least next year. Anyhow, BSN is aiming for the rapid deployment of blockchain technology in China, integrating it across multiple industries as the foundation of the digital economy. The infrastructure is expected to streamline operations, maintenance, reduce costs, and bolster the interoperability of blockchain apps. By integrating Chainlink's oracles, the BSN plans to build an inter-chain communication hub to increase interoperability to the desktop apps and employees. Okay, great. So here's what's going on. The problem with blockchain is that they're just stuck on their own blockchains, right? Whatever is on Ethereum's blockchain is on Ethereum's blockchain. You can't pull outside data. It's hard to share data. The same thing goes with EOS and Litecoin and Cardano and whatever else, Tomato Coin. Whatever else you're going to talk about, they can't pull outside data in. That's the beauty of Chainlink. So it's able to use an API, pull all this outside data, this real-world data in there so it can actually execute any types of commands that need to be done. And I think that's why they have to use these things. And when I saw Chainlink, I was like, boom, light bulb goes off. That's a good buy. But, I mean, we'll see how it all works out. Yifan He, CEO of Ray Technology and BSN co-founder, states, one of the main purposes of BSN is to provide interoperability of dApps. God, they said like 3 times. Regardless of whether they are for permission chains or public chains, on BSN, each dApp should be able to call any other dApps in a very convenient and low-cost way. This collaboration with Chainlink, Yuritsa, and SNZ Pool will help us achieve this goal and ensure that BSN users reach new levels of security, reliability, and interconnectivity. And I got to tell you, there's been nothing but good news about Chainlink coming out over and over again. The price has reflected that. It's still up pretty massively over the year, so hopefully in the next year or two, we can see some even bigger gains. But let me know what you think in the comments section. Let's move on to our last article. This one was hilarious. So Cointelegraph put out a pretty good article by Marcel Pitchman. I got to follow him, give him a like. And it pretty much just lays it down like, hey, this is what's going on with all the trades and whales and how they're pretty much putting the wool over your eyes. So it states, unlike traditional finance markets, crypto exchanges are largely unregulated. I think we know that, and I think we know there's massive manipulation going on. So here's 3 strategies. 1, hidden orders. They're used to place sizable, undetected bids and asks on the exchange order book. I had no idea this actually existed because I'm not a trader, so this was all eye-opening to me. They allow for the automatic replenishment or iceberg after each fill, thereby avoiding detection on exchange order books. This strategy is the opposite of a buy-sell wall, where a trader spoofs the market by placing large orders with no intention to actually execute. Many buy and sell walls are not meant to be executed. They're meant to represent large flows, but are usually canceled the minute the market reaches their levels. Very few whales will self-report their flow before executing it, which is why they're actually doing these hidden orders. So it makes sense. A simple way to avoid being deceived by a hidden order, this is great, is to not monitor the order book like a hawk. So here's how you don't get screwed over as a trader. Just don't monitor things. Makes sense. Just don't look at it. The less one relies on measuring order book depth, the better. Exchanges allow traders to minimize the order book from the trading view screen. Some traders do consider order book flow an essential part of their trading routine, and there are more sophisticated tracking programs readily available. However, it is worth noting that market makers and algorithmic traders know how to manipulate those as well. So the very first thing they're talking about here, which is this hidden orders, they're like, this is what could happen. Watch out for this. And then pretty much they say, you really can't do anything, so good luck. So that's the first one. So if you're a trader, God bless you. Anyhow, wash trading. Using multiple exchanges will sometimes deceive the general public by posting large trades on heavily monitored exchanges while simultaneously doing the opposite on smaller ones. Traders looking to avoid these tactics can ignore large individual trades and focus on longer price trends to prevent being misled. So again, good luck finding that. You have to look at the large trends, which is what I try to do here. I don't look at trends per se, but I try to look at what is the macro field doing. What are the roadways to mass adoption? What kind of positive news or negative news is out there that could really affect the market? This is what I look at and what I think is eventually going to move us in the long term. Short term, I mean, if you're TA, sure, I guess, but it's not my thing. Last one is forced liquidation. And as it may sound, sometimes a whale will prop up prices to liquidate their exposure. This holds especially true when the market is already over leveraged. To benefit from this tactic, whales simply open an opposite position of similar size. Forcing a liquidation, oftentimes, leads to a cascade of similar order flow, and while most short sellers will suffer and the whales has its large short positions liquidated, the entirety or the entity responsible for the forced liquidation also boosts their gains on the previous long contracts. So essentially what's going on is like, hey, I'm going to eat it on this end, but I'm going to make it over here. So if you're on my end where I am getting liquidated, sorry, but on my other end, I'm going to make a lot of money and you're going to get caught short. So sorry. Again, there's no way to predict whether an entity is building this kind of strategy, but there is an important indicator one can monitor to avoid being on the wrong side of such moves. Comparing the premium on longer-term contracts to perpetual futures provides an unbiased tool that helps to gauge professional traders' positions. A neutral market should display an ascending curve. A flattening or inverted curve signal are heavily skewed to a bearish sentiment. On the other hand, any premium above 1% for contracts expiring within 3 months is a bullish indicator. So all of that, reading that just made my brain hurt. I don't know what that was as far as trading. I'm sure the smart people know that, but I'm telling you, just like there's that thing that I agree with Chamath. And when he's talking about there's only so much things that we can think about and killing brain cells and really going through the whole rigmarole, it's a lot of stuff. And if you're into trading and you love it, great, go ahead and do that. But I think there's a lot more people out there that just want to like, look, I got my kids to take care of. I got to go to work. I got this other thing I got to do, and I don't have time to trade. I'm just gonna, invest. Hopefully, it all works out, and I don't want to really deal with it too much. Set it and forget it. And that's where I'm at. I've only got so much time in the day, and I've only got so many years left on this earth, so I just don't have time for all those things. Now, if you do, great. Then go ahead and do it. I just think that there's only so few people that actually can do that or want to do that. That's all I'm saying. So the main takeaways. Professional traders go to great lengths to avoid detection. They do the exact opposite when they intend to utilize buy and sell walls to benefit from FUD or FOMO. Unfortunately, there's not a 100% transparent, auditable indicator that can monitor manipulative tactics, especially in a market that has nearly zero fees for large traders and, again, unregulated. As a rule of thumb, retail traders should learn to take a longer-term view on crypto price action instead of watching charts measured in minutes or whatever else. So that's why on this channel I talk about this thing called dollar cost average. You can just put in, like I do. Like I put in $50 a week for Chainlink. Well, it was 25, now it's 50. And then I just, some weeks Chainlink's going to be $5, some weeks it's going to be $4, and I'm going to even out. But then as time goes on and that parabolic bull run hits, which, as we talked about, my exit strategy, this is what happened last time, and the time before that, you got pretty much a month, and that's it. So if you can just hold out till then, implement your exit strategy, you're going to do fine. If you want to trade, go ahead and trade. Just not my thing. All right, and that's it. So hey, thanks for sticking with me through the entirety. I know it was long, but a lot of stuff to go over. Just so you know, there's a join button underneath if you want to. When you join, you don't get anything special. Nothing like I hold anything back for members. It's kind of like a tip. And for all my level ones that come in, just a couple bucks, and it goes to help support me and the channel. I always like when people say, yeah, it's here to support the channel. The channel is me, let's be honest. So if you can pick a couple bucks for a tip, hey, I'll take it, thanks. So level ones, thanks. Level 2, they pay a little more, so I give them a shout out. So All Right Soft, my man Wen Mullet, who helps me hold it down in all the different premieres. Myself, who else? Dave Plummer, Grant Sharman, Bruce Wood, Baking Benjamins. They do Tezos stuff, so if you guys are in Tezos, want to put that into staking, those are the guys. Noel Flip in Vegas, Martin Lewin, Michael Ralph, William Howell, Crazy Crypto Canuck, Tessie Ryusaki Positive, JC Durex, Crypto Veritas, John Miller, The Office, El Merg, Michael Jeffrey, The Kell Show, Mage Research, and finally, Terry Prosperi, XRP Carolina, Whatever AE, and Hero Soap Company. They do soap, in case you didn't know. And lastly, I'll say my email is dandigitalassetnews@gmail.com. Those are for business inquiries usually. But you may get an email from this schmo named Dan Digital Asset New, and he is a scammer. So if you get someone from Dan Digital Asset New, that's not me. That's just some punk who's trying to get you to sign up for some goofy trading thing, which I think after that last article, you know I'm not a trader. So just ignore it or put in a spam or write him back and tell him what a piece of trash he is for trying to, steal money from you, because you work hard for your money, And that's it. So look, thanks for sticking with me. Appreciate it. See you on the next one.